after this, after people see it online with the Maryland Blockchain Association, that I'll have 21,000 by the end of the week. Let's try to make that happen. So definitely want to connect with everybody there. I've been fortunate, guys. I've been really fortunate. I've been in the real estate space for 19 years, specifically in private equity, working with family offices, making sure that we manage their assets correctly, making sure that we do 1031 exchanges. And I would say that I've saved a lot of butts in my career. And what I've done for the last 10 years is focusing on helping family offices out of big box retail, which you see we did a deal in Highland, California, and then we convert those deals into multifamily housing. And it has been an incredible journey. And I'm just grateful for what I've been able to do. But as I started to do more deals, I realized that, the money's great. You can do good things with it, but then what are you really doing? What I had a come to Jesus moment and think about, what am I doing? Am I creating value in the marketplace for people who absolutely need it? And what I started to do was I started to take my capital and started to invest in my own assets. And when I bought my first property in 2016, a 4-unit in Brooklyn, my first $1 million property, so it was like a big deal for me. And as I started to rent them out, I had an idea to work with the city of New York and actually start housing families coming from shelters. Now, it made a lot of sense because the city pays for 8 months up front. They pay for all the rent. We're able to get guaranteed cash flow. It doesn't matter if it's a pandemic, anything that's going on macroeconomically, I'm still getting that paycheck every 1st and the 15th, right? So it made a lot of sense. And when we housed our first family in 2017, it was a moment that I'll never forget, because the woman who took the apartment, she had a young son, 10 years old. And when she got the keys, she broke down in the most grateful tears ever, right? And it was a moment that I knew that I wanted to do something different. I knew that I wanted to do that forever. It was something that I knew that I wanted to do forever. So I had that 4-unit, and I wanted to buy a 5-unit. And the next property I bought was in the next slide, the next one over. So I wanted to buy the 5-unit. So I go to the bank and I say, bank, I'm looking to buy this 5-unit. So the bank says, okay, we'll lend you the money, but only if you can show that if you own similar properties. So I only own a 4-unit at that point. So the bank is pretty much saying, no, we can't lend you unless do you have a rich uncle? Do you have a trust fund? I didn't have those things. So most developers, emerging developers, stop right there. They got their first property and that's it. But if you wanted to expand, it feels almost impossible to go the traditional route where you're going to go to the bank, because they're not lending to you unless you can demonstrate that you own properties. And even though at that point I've done $100 million plus in deals, they don't want to hear that. It's not about the deals that you did. It's about what properties you have that you have your name on the deed. And I didn't have my name on the deeds for those properties that I transacted for family offices. So instead of just wallowing away and crying to the next level, what I decided to do was create a system. And at this point, this is 2017, 2018. I got into blockchain technology in 2016. So I started traveling the world, Dubai, Hong Kong, all over this country, and learning about how real estate and blockchain intersect. And when I went to Dubai, it was mind-boggling in 2017, because they had a plan in 2017 to have all their financial instruments on the chain by 2030. And we in America, they were leap years ahead when it came to blockchain integration into financial infrastructure. In America, what I saw was more of the casino, more of, I'm going to buy this coin and become a millionaire tomorrow. But I knew that wasn't where the value was. The value was actually taking the infrastructure of what blockchain can do, create efficiencies in dividend sharing and cap table management and capital raising. It's the boring stuff, the stuff that doesn't really sound exciting, but it actually creates efficiencies throughout the system. So what I did was I decided to replace the bank with community at that point. And what I did was I got people who understood what I was trying to do. They believed in the mission. And then I created a token at one of my best friends who came on board as a CTO. He actually helped Venmo and PayPal build out their blockchain system. So he came on board as our CTO of equity platforms, and we created the first digital token backed by government affordable housing, voucher-based affordable housing, which was that first property. And we gathered cash from people who were interested in investing. We took that cash and we acquired our 5-unit property. Then a year and a half later, I wanted to buy an 8-unit. So you go to the bank, you say, look, I want to buy an 8-unit. What do you think they're going to say? We're not going to let you because you don't have an 8-unit in your portfolio. So until you can demonstrate that you own an 8-unit, then we'll lend to you. And now that's a chicken and an egg situation, right? I mean, it's most emerging developers are caught with that same problem. So we did the same thing. We got people around the community, around the neighborhood. We partnered with the mayor's office in New York City, and we were able to buy an 8-unit, convert it from an office building into affordable housing, which was awesome. And then from there, we bought land. Now we're partnering with other manufacturers to build land. So my point is that as an emerging developer, there needs to be other options out there other than going to the bank, because the bank is not here to kind of help people that are emerging. They're here to help people who have properties that have been passed down, wealth that has been passed down, people with trust funds. If you don't have that, you need other systems. So we created Equity Coin, and then we thought about it. We say, you know what? There's an opportunity here because there's hundreds of thousands, if not millions of other real estate developers, emerging real estate developers who need the same type of system to raise capital. So we said, you know what, let's white label what we did with Equity Coin with our properties. Let's white label our smart contract. Let's white label the ecosystem that we did, all the work that we did with our Securities Exchange Commission lawyer. We were able to create an ecosystem where now any real estate developer or startup founder can tokenize their existing assets and in order to acquire new properties all on chain. And this way, you're replacing the bank with community, essentially. So I want to go and show you guys. Okay. Yeah. So the question that we have to ask is, what if the people who believe in us could own what you're building? And that's what we did with Equity Share. Equity Share is the platform that was built for real estate developers and startup founders to raise capital on chain, to be able to create community, to be able to have an infrastructure for compliance, to be able to send out dividends within minutes to their investor base, and for their investor base to communicate with each other on the platform. It's a single node that becomes the operating system for your business. Most people think tokenization, they're thinking Bitcoin, and we'll get to the delineations in a bit. But what we're doing here is any business, doesn't matter what kind of business, can be a cleaning company, can be a driving service, it doesn't matter. Every business has customers, every business could have investors. This system becomes your operating system for all things investing and operating. So on the left side, you'll see that's the tokenization, or the investment. So if you have an investment that you have, like a property, a building, a startup, you can go to the site, you can add that to the platform and be able to raise capital on the platform using Regulation CF, which is crowdfunding. On the right, you'll see our managed tokens page. So as an investor, you are given tokens that are valued based on the company, based on the assets that are backed by that smart contract. And then in the dashboard, in the Equity Share dashboard, you're able to see your dividends. You're able to see the value. You're able to, like I said, communicate with other investors and also the operator. So this becomes the single node, single point of communication. And I just want to kind of back up and just give you guys a recap of the story. I got into finance private equity. Then I honed in on affordable housing. And then we have one thing I wanted to make sure you guys know is that we have a documentary on PBS called Crypto Decoded. It's on Amazon Prime. I encourage everybody to watch it. It's actually Vitalik, who is the creator of Ethereum, is in the documentary as well. So it kind of showcases what we've done, how we've done it. I think it's a great way to really dig in. And then recently we got recognized by the Brookings Institution as one of the top innovations in the nation. And then we have, let me see, what is it? Yes, and then we launched Equity Share in 2025. So this is where I'm really focused on at the moment in order to help small business owners and startup founders get out there and be able to raise capital in the cleanest way possible. I want to take a moment and talk about the history of ownership because it's going to set the stage for kind of everything that we do moving forward. I don't know if anybody in this room remembers, but we started with pieces of paper, certificates of ownership. And back in the early 1900s, we had stock ownership of Coca-Cola, let's say, for example, pieces of paper, and you would frame it in your wall. What's interesting is that today, it is 2026, and today, if you own a private corporation and you buy, you start your company on, LegalZoom or one of these other platforms, they're going to send you paper certificates to give to your investors. Like it's 1940 something. And that blew my mind. And I said, you know what? Every business, every corporation that gets created today should be given digital shares, and it should be all on chain so that it's easy to check. It's immutable. There's no questions. As long as you have an internet connection, you're able to see your shares and see the value of your shares and be able to transact on chain. So I envision a world where when you start a corporation, whether it be on LegalZoom or Equity Share or wherever, you're going to be given digital shares in order to distribute to your investor base instead of paper shares. And then, guys, remember, it's 2026 and we're still doing paper shares. So we go from paper certificates to electronic databases. And then in 2008, we started with crowdfunding. Now, before 2008, 2012, sorry, it was impossible for ordinary people, if you weren't making above $200,000 a year, to invest in a startup, in real estate, that may not be your own. And crowdfunding opened up the floodgates for 92% of the citizens in America to be able to invest other than their own properties or their own things. So that was a big thing that the Obama administration actually brought to the table and democratized investing for everybody. And then we have blockchain that was started. Blockchain has actually been around for about 34 years. Blockchain is not something new. Bitcoin actually made it popularized, but two scientists came together in the early 90s and they wanted to create a trustless society, a society in which there's two parties and there's an intermediary that does not require trust because it is transparent and everybody understands both parties. Any parties that are involved have the same tools in order to be on the same page. And then we have programmable ownership, where we're heading now. And then the shared equity economy, I think, is the future that we're seeing, where everybody will be walking around with shares of individual corporations, buildings in their neighborhoods that they're going to own shares of. It's going to be integrated not only into the the economic apparatus, but government. I think when you raise money or when you're building a $250 million building in Brooklyn, New York, or wherever you're building, the government is going to start to require those developers to allow the community to invest alongside them, especially if they're getting government dollars for their taxes. And I just want to kind of step back and talk about what is tokenization, right? We're taking an asset, whether it be commodity, gold, real estate, stocks, shares. We're taking that asset and we're creating rights. So this person owns a specific amount of this property. They own the rights to this income. Whatever those rights are, they have to be registered with, in America, they have to be registered with a state. So that's an important part. This is not just, people like, in the ethers. This is actual rights and assets that are owned. And then we take that ownership structure and we create a smart contract that actually creates the functionality on chain and digitally of what those rights and what that asset is. So you're taking the hard, coded things, turning it into a digital asset, and now it becomes programmable. Now it becomes something that can be more liquid. If you wanted to, sell your shares, you can sell your shares within seconds rather than trying to, if it's not on chain, then you have to get a lawyer. You have to, go through processes that you otherwise wouldn't have to on chain. So I just want to make sure that everybody is aware of tokenization and what it is. And this is an important slide, guys. This is Bitcoin versus blockchain versus tokenization. When I started my business and I started tokenizing assets, people were like, "Oh, that Bitcoin thing." And the reality is that Satoshi Nakamoto in 2008, he created Bitcoin as a way to kind of combat centralized ownership. And it is a currency. It is a cryptocurrency. Blockchain has been around since the early 90s. Bitcoin has been around since 2008, but there's a clear difference. And there is no Bitcoin without blockchain. So blockchain is the underlying layer. Now, tokenization is when you're taking assets, real assets, and then programming them to become on the blockchain. So these are not, I would say interchangeable. They do stand alone. And just because something is on the blockchain doesn't mean that it's directly related to Bitcoin. The opportunity is ridiculous, guys. I mean, it is something that we haven't seen since the internet, right? This right now, we're still less than $1.2 trillion of assets tokenized. And based on research, we're seeing that we're going to be at $30 trillion in tokenized assets by 2034. So what we're seeing now is an incredible growth factor. And I want to ask a quick question to everybody here. How many people here have a website or a web page that they use? Pretty, yeah, right? Yeah. So it's probably like 90% of people here. So if I asked that question in 1993, nobody would have raised their hand. Nobody would even understand really what I was talking about when I said website. Yeah. Right? It was actually illegal for people to own websites prior to 1991 because the government needed to figure out how to regulate it before allowing the ordinary person or the ordinary business to start a website. So my second question is, how many people here have their own token and have tokenized their own asset or company or anything, right? This is the same amount of people that would have raised their hand in 1993 if I asked you about a website. And my vision is that in 20, 30 years, when I ask this question, everybody, of course I have a digital token. What are you talking about? It's like, that's a silly question. So I see that same kind of like thought process with tokenization in the future. And the status quo right now, you have a company, you get lawyers, you have all these intermediaries as you're raising capital, as you're disposing of assets, and it creates barriers to entry in each part of the system. And it creates cash flow problems where you have to pay for lawyers, you have to pay for, Securities Exchange Commission intermediaries. And what's going to happen in the future, in the near future, with a combination of AI tools and agentic AI with blockchain technology, is that all of these are going to start to be removed from the plate. So you're going to be getting closer to the ability to have an idea today. Literally, I can come up with an idea today and be able to get it funded within a few days simply by having the tools that I need for tokenization and fractionalization of that idea. Being able to get it compliant within a few days. We actually have an AI tool called OMAR. It's an offering memorandum auto reporter. One of the biggest issues with raising capital is the compliance, working with the Securities Exchange Commission. So with our AI tool OMAR, you can plug in a few pieces of details, and then it cross-references hundreds of thousands of approved offering memorandums in the database of the U.S. government, and creates a 30-page offering memorandum for you to use right away. So usually it takes about 3 months to come up with a really great offering memorandum, and it costs you between $10,000 to $20,000. But we're getting to a point where you can do that within days and cost you just a few $1,000s. And that cost is going to start to really truncate, and we're going to be able to do it within minutes for almost no money, probably for free soon. So it's important to see like where we're at now and where we're going. Now, what's broken? We kind of talked about it before, but it's expensive right now to raise capital. It's slow. You've got to have lawyers and all these intermediaries. It's manual. You have to, you have these stock certificates. You have nothing is digital right now. And it's 2026. I got to remind you, it's 2026, and it's fragmented. There's no single operating system where you can connect with your customers, your investors, all in one place. And that's where we're headed, in the future. We're headed to a place where everything is in one node. You're able to easily raise capital, do your compliance, and keep everything in one single apparatus. The ownership layer right now is, you've got investors, you've got customers, you've got attorneys that you have to deal with, you have compliance tools that you have to deal with. When you own a business, all of these are separated. They're all scattered and they're all fragmented. With tokenization, you can bring them together in one node and then be able to manage them from a single dashboard. And that's what I showed you earlier with equity share. And today we're going to create our own token. We're going to use the audience's prowess to create our own token. And let me go back really quick. Yeah, we went over our tokenization here, and we went over the flywheel. We don't have to do that again. Now, I want to make this a little bigger. We have should you tokenize? Let's see if we can make this a little bigger. It's possible. Yeah, there it is. Okay, got it. All right, perfect. And I'll go ahead and reduce it when I need to. All right, excellent. So we have some questions, like if you should tokenize, right? This is going to let us know if your business is tokenizable or if it's something that you should even explore. So the first question is, do you have 50 potential investors in your network already? I think most people would say, yeah, I do, And is your asset valued at $500,000 or more? Now, this is not necessarily a requirement, but I think if it is valued at more than 500,000, then it makes sense because it's going to reduce a lot of costs when it comes to compliance tools and accounting and then legal forms that you're gonna have. So if you're not making up to 500,000, then if your asset is not valued at that, then it might not make sense to do it. But we're going to say that we own real estate and it's worth $1 million. So if you plan to raise capital in the next 12 months, 100% you should be tokenized. So if you have 3 of these here, then you have a strong potential to tokenize. You do. And if you have reoccurring revenue and distributions to shareholders, like it could be income from your business, it could be sales from commodities. It could be rent that you get from your properties. So if you have recurring rent then you're going to save a lot of time and administrative costs on the dividend distributions. So do you want investors to participate in governance decisions? So this is decisions on, should we invest in a property? Should we, buy this piece of land? Should we get this new, person within the company? So if investors are making decisions, then you can use blockchain in order to give them an opportunity to give them a thumbs up or voting references. So if you're building a community, I think every business should have a community around their operating, because your community of investors, your community of customers, they're what drives you, right? So if we click more than 6 of these, then you should probably tokenize now, and definitely connect with us at Equity Share so that we can help you through that process and be able to answer any questions that you may have. And then 2 more questions is if you want a digital cap table instead of an Excel spreadsheet, which Excel spreadsheets can get lost in the sauce. You just don't know. When it's on chain, it's on chain. It's nothing. If something happens to Google, your Google Sheets, you lose access to your Google Sheets, whatever it is, or your computer goes out and you no longer have that spreadsheet, or something happens in the cloud where you don't have access to that, you're kind of screwed, right? So having it on chain takes away all of that thought process. And then, are you open to working with the SEC, right? Open to securities offerings. These are all the important points that you have to ask yourself when you're looking to tokenize. These are some of the questions that you would want to ask, like about your token. What creates value? Who would own it? Why would someone invest? How do they earn? Why use blockchain? I want to ask the audience really quickly. Is there anything that you believe whether it's your business, your property, is there anything that you would want to tokenize, that you think about tokenization? I'll give you a second.
Some of my baseball cards.
Oh, that's awesome. That is awesome. And I'm so sad because in one of my properties, one of my guys, or one of my workers, stole my baseball cards. Yeah, it was tough because I've been saving them for like 30 something years, right? But okay, baseball cards is amazing because they add value over time, and all they have to do is sit and be in mint condition. So if we have baseball cards and we have people who are able to see those cards, we create digital representations of them, digital twins of those baseball cards, and people, they know where they're placed. We would put them in a vault or in a bank. We would have a certificate that those cards are safe and ready to always be accessed if needed. And people who would want to invest in that would be people who are into collectibles, who understand the value of collectibles. So it would be, let's say, the collectible coin, right? Or yeah, let's just say that, right? Collectible coin. And they would use blockchain in order to make sure that no matter where you are in the world, you're able to own a fraction of these baseball cards. Mm-hmm. So your baseball cards, let's say your baseball cards are worth about $250,000, which you never know, right? We never know. If you save them long enough and you have the right baseball cards, the Mickey Mantle baseball card, I think, traded for a few million. So you never know, right? So let's say we have these collectibles and let's go here. This was great. And I definitely we're going to use this we're going to create a token in real time right now, guys. Right this moment. And this is going to be the collectible coin. Is everybody in agreement? Everybody likes that? Collectible? Yeah? All right. So we'll do that. So let's go ahead and we are going to use Equity Share to log in and to tokenize this new coin. So I'm going to log in here. And I encourage everybody if you can, it would be a huge help to create an account on Equity Share. Every user counts for us at this point. It's equityshare.ai. And you can, if you have a minute now, you can do that now. That would be amazing to create your account on Equity Share. Okay, so you log in. If you wanted to create this token, we're going to log in. We're going to go to Asset Tokenization, and we're going to connect our MetaMask wallet. Right. Let me actually bring this over here.
That means you have to have a separate wallet first.
Yes, you have to already have a wallet on MetaMask, or
it has to be MetaMask or any.
It doesn't have to be MetaMask, but I think MetaMask has been the go-to for us, and for people who are using Ethereum. We use Ethereum for our tokenizations. So go back here. We were able to connect our MetaMask wallet. We're going to go next. And for this one, we're going to do a test token. So usually we charge $950 per token that we tokenize on chain. This one is going to be a test token, so it's going to be using Sepolia, which is the sandbox mode. So let's see, this company that we're going to create is going to be Collectible Coin LLC, and we're going to do this in Delaware. Delaware and Wyoming are the best states for tokenized assets and companies. This is going to be a sample registration, and we're going to do equity. This is equity in those cards. So we're going to start off with 1 million shares. Let's start off with 250,000 shares, because what we'll do is we'll have it. Each share is valued at $1. Each token is valued at $1. And we're going to do a shareholder lock period for 1 year. Now, this lock period is important because it's determined by the type of capital raise you do. Most capital raises require 1 year of holding the asset, especially if it's a private asset. So we're going to do Mona. I hope I'm spelling your name right. Perfect. Mona McKenzie is the authorized signature on this one. Okay, so what token symbol do we want to go with collectible coin? Let's say, yeah. Let's actually collect.
Okay.
Yeah, collect. It'll be collect, yeah. And this will be the collect token. Or the collectible token. I spelled it right? Did I? Is there like a space there?
Yes, it's a space.
Yeah, okay. So this is the collectible token, and we say we're gonna do 250,000 shares on chain. I'm a retail investor. And we have promo codes. So if anybody is interested in tokenization, you can just tap in with me and I'll be able to provide you with a really cool promo code specifically for Maryland Blockchain Association members. So we're going to go ahead and deploy this smart contract. Now, as a smart contract is going, it depends on how clogged the system is, the Ethereum network is. On a time like right now, it's pretty active. So this will usually take about 10 minutes, give or take. Now, there are 3 smart contracts that are created here. The first one is the token contract, and that gives you your token symbol, your token name. It tells you the registration number, the state that you're in. It's going to give you all the parameters that are there. Then you have the balance sheet. Now, the balance sheet is what keeps the clean ledger of your investor base. That's what makes sure that at any time, regulators, your other investors, your accountant, they can always go to the blockchain and be able to see that this investor has this many tokens or this many shares in the company, and it's always immutable. And then we have another smart contract that makes sure you have the KYC and AML compliance. So KYC, know your customer, anti-money laundering, that makes sure that it's everybody that owns this share is not a nefarious player. They make sure that each person has been authorized to own this particular token. So once we create those 3 smart contracts in the back end of the system, it combines those 3 smart contracts and creates a cohesive ecosystem for your single node, your operating system for your project or for your asset. And while this is happening in the background, we'll go ahead and continue the presentation, and then we'll come back to it after it comes through. Does anybody have any questions while we have like a moment for the token to be created? Anybody have questions about tokenization of assets, or the ability of an ordinary person to do it? What does it mean for an investor? If you have any questions.
Yep, I do have a question. You talked about real estate. Let's say you have a building and you tokenize it. How is the reconciliation happens with the title company who owns the title?
Right. So the title, so you should own the title. If you own it, you should own it in order to be able to tokenize it. If you don't own the title, you cannot tokenize it. You have to be the one on title in order to be able to tokenize that asset.
And what if I sell the property to somebody else? What happens to the people who has those tokens on?
So they need this. Your tokenization is a representation of real world application, right? So if you sell your building and you don't give the shares or give that, then that's something that is wrong, right? You have to be able to, and this goes into the SEC, the regulatory part of it, right? You have to be able to discern what's important, and that's most important, is making sure that if you sell your property, if you sell your cards, then you need to be able to share that with your investor base. And the thing is, we're working towards a place where the compliance that, like, for example, the SEC uses a system called EDGAR. When that's how you communicate with the government, is through their system called EDGAR. And what we're trying to do is with Omar, that with our system that we created, we want Omar and EDGAR to be best friends. So when something sells, we should be able to see that transaction or be able to track that transaction and make sure that the people who own it are aware that that transaction has been done without any need for the operator to connect. Right now, we're still we're so early. We're so early that we still have some manual processing that's required. But soon, as these tools get smarter and smarter, there won't be any need for that manual processing. But as it stands at this very moment, if you sell an asset, you have to be able to share that with your investor base. So for Equity Coin, for example, we've been sending out dividends for about 4 years now, right? So our income comes in, we share that every quarter with our investor base, we give them reporting, and that's how we've been able to do it on our side. But moving forward, we're getting closer and closer to that point where we're not going to need it. But I hope that answers the question.
So
Yeah.
just to double click into it. So for now, what you're saying is when you give out the dividends, they do happen with equity coin, right?
Mhm.
But to SEC or to IRS, you have to report that in fiat currency, how you did it. So you're doing that translation and reporting that. Some parts of it are manual today, but with Omar, the idea is to make it all a seamless system.
That's exactly right. And by everything being on chain, as far as my dividend sharing, as far as my sharing of revenue, it makes my accounting so much easier.
Right.
Because now my accountant can just go to the chain and see all of the funds that have been transferred. I don't have to, find this bank account or this bank account and try to do this hodgepodge of. I mean, everybody here knows how annoying it is to do their taxes, right? So if we can have it all in one node, that removes a lot of friction in the ecosystem. for sure.
So I'm also thinking to help maybe answer a question is that currently when you are buying a house, you will go to an office, you get signed paperwork, there are deed parts, right? So if the tokenization or your asset is tokenized, you have to disclose that in that process and transfer the asset online to that person. If even if that person doesn't have an account on the system, anything, whether it's a code or whatever they represent online, you shouldn't keep that. If you sell the house, it doesn't belong to you anymore. You should be able to transfer that to that person. Whenever they decide, they can access that online, and maybe if they need to update stuff on their name, they should be able to do that.
I think you are correct, and that's where we're headed.
Okay.
That's where we're headed.
Yeah.
For sure. But I think right now there's the states in America are just getting started
Okay.
with tokenization. So the state of Delaware has a blockchain initiative where they give you a rubric for tokenization of assets, and you take your smart contract. Your smart contract has an ID. So you take that smart contract ID and you register it with the state. Now the state has access to all the transactions, all the investor activity, right? So that gives the connection between government, oversight
Yeah.
and the token itself
Individuals.
and the individual token. But it's going to get better and much more robust as we go.
But do you think that is still a manual process, like the smart token ID connecting it to a state system? I don't think there is a direct link between the two. Somebody is like downloading this data and reconciling with the government contracting or the back office system.
So there is in Wyoming. So in Wyoming, and I just did a tokenization for a gentleman who invests in real estate. And in Wyoming, you take the smart contract ID, and then with that smart contract ID, it's on Ethereum. You select the network, you say Ethereum, you give them a smart contract ID. Now I don't know exactly what they do in the back end, but I can only imagine that they would take that ID and then be able to implement it into the system and be able to have that connected to their system so that they can be able to see the transactions and implement it into. So I would imagine that that's where they're headed to, but I don't have any insight into what they do with the contract ID. But it is a requirement in Wyoming. So if you have a tokenized company, you have to provide that ID. I would imagine that they would use it. So our token is complete, guys. We have the collect token. It's on the Ethereum network. Yes, yes. And you can see the 3 smart contracts that were created, the token, the balance sheet, and then the allowance sheet. Those are the 3 ones that we spoke about. And let's go to the token. Let's see it on chain. There it goes, the collect token. 250,000 supply. We've got 1 token holder. It's the person who created the token. And now you're ready to start sharing. You're ready to start getting investors within today. We could literally create this company, and with AI tools, we can create a website that's kick butt. By the time this demonstration is over, we have a company, we have a token, we have an offering memorandum. So within 15 minutes, we can have an entire system where we can start raising capital for this collectible coin.
I love it.
Right? I mean, I think that's pretty cool. If I must say so.
Yeah. How do you determine the number of shares and par values and things like that for your token?
So it's just like any other corporation. It's very random. It's very random.
Shares, what you want to have for your company.
Whichever ones that you want. If you want to have 1 million shares valued at 1 cent, we can do that. If you want to have, it really depends. Now there are like psychological references, right? For us with Equity Coin, we have 50,000 tokens valued at $100 per token. So we have a $5 million valuation for a company, which includes our assets. It includes our intellectual property. It includes all of these different things. So our valuation is $5 million. And we did that through something called a 409A, which is your document that outlines your assets, your, like I said, intellectual property, anything of value, your human resources, and you're bringing that into a document that explains why it's valued at that valuation. and why people should invest at that valuation.
And I might have missed this in the beginning, but it's I think it's pretty evident. But equity coin is on Ethereum
Yes,
blockchain.
yes. Equity Coin is on Ethereum blockchain, and that's the first token that we created here. And I didn't on this computer. I don't have my MetaMask wallet, but if I did, I'd be able to show you guys the back end of managing your tokens. And maybe I'll be able to do that at a later date and integrate it.
So do you know which other wallet we can use for this if you don't use MetaMask?
You can use Trust Wallet. We've used Trust Wallet before. We've used Coinbase Wallet.
Okay.
We've partnered with Coinbase in the past. So yeah, so we created our token, and these are the steps that we took. We had our idea. Now, the legal structure, if we have Collectible Coin LLC, we'd probably go to incorporate.com. I like incorporate.com to create all my companies. It's easy to use. It takes about 3 days for the company to be notarized by the state. So literally in 3 days, it'd take about 3 days for us to take a company. If it's existing, we could do it today. If it's not existing, we would have to create it and make it real with the state. But within 3 days, we can be able to start raising capital. And for us, what we've built is we've gone from $1.1 million in assets under management. And within 36 months, we have $5.5 million under management with Equity Coin. We have 157 shareholders. We send out quarterly dividends. Mona is actually one of our shareholders. Shout out to Mona. And we have an AI-powered agent, Omar, which every day he's getting stronger. Like we're really testing the limits with what Omar can do on a daily basis in terms of compliance, making sure our investors are safe, and then making sure that the government is able to communicate with our token. And at the end of the day, like I said, guys, we're here to help people replace the bank with community. I think the bank is the big bear. When you poke up, it's the big bear that that controls and has the biggest monopoly. And I'll start landing the plane with this. If we think about Uber and the creation of Uber, we think about the creation of Airbnb, Toro. These are companies that have gone against Goliaths. And when I say Goliaths, I mean systems, right? When Uber first came out, all over the world, there was uproar. People were taking people out of Uber cars, beating them up. Because it's like you're taking away from my monopoly, right? And being able to control a market is very powerful. So that's why there's a lot of pushback with Uber and even with Airbnb, New York City, right? New York City is pushing back. We own properties that some of the units we had Airbnb, and it was helping us pay for mortgages. It was helping the ordinary person to have their separate, apartment where they can rent it out. And we can talk about that a lot, but at the end of the day, who really hurts? It's not the ordinary person that's up and I don't like Airbnb. No. The person that's up and roaring are the lobbyists for the hotels because they're losing money. They're losing money every day. The people who are up against Uber is not the person who's hopping in a car. It's the taxi commissions who are saying, we want to set the best price. We want to set our price, right? Even with Turo going up against Hertz, going up against Enterprise, they're letting you take your extra car and start making money on the side. But Hertz doesn't want that. I have a centralized business. Why would I want an ordinary person to be able to compete with me? So think about how that applies to banking, right? Right now, there's one central place that you can get financing for a property, pretty much. It's the bank. So imagine if there's this decentralized system that anybody can tap into, and as long as you have assets, as long as you have an idea, as long as you have intellectual property, as long as you have something of value, you can be able to create, replace the bank with community, similar to how the community has replaced taxi commissions, hotels, with those other systems. So I think it's a good kind of way to think about where we're headed with blockchain.
I have a
Yeah.
question on that part. So you talked about building community. And the core aspect of building community comes from trust.
Yes.
Do I trust what you are selling me is
Yes.
the right thing? How are you building that trust? Because it's hard for me to like take your token and buy it and then have a faith that, oh yes, you're going to give me the dividend. And what if you don't? I'm losing my money. How are you building that trust?
I think so what you're tapping at is the human aspect of this, right? Which is very important, right? Because anybody who raises capital on equity share, they go through a stringent, we go, first of all, your background check, thorough background check. Who is this person? Do you have credibility in the marketplace? Have you been doing this for 10 years plus? Do you have assets already that you can show me on title? These are questions that are going to be important. And then also, some light ones are like social media, like LinkedIn. Are you connected? Are you a real part of the community? Or are you just like an outsider trying to like just infiltrate and just take advantage of people? So I think, for example, like Mona came on board, she probably saw that I've been at this for 2 decades. Like I dream in pro formas. This is what I do, and I've proven myself. So I think what I want to do is help people who have proven themselves. You've proven yourself worthy of the ability to manage property, to manage assets, to do this. Now all you're missing is capital and community, right? So if we can tap into that, I think we've got a winner. But you're right. The big part is that trust factor, right? And we have safeguards in place for that. And the government requires, we go above and beyond what the government requires, in terms of safeguarding. But that's the human component that I think is really important. Yeah.
Can I understand it as a form of crowdfunding? Okay.
Yes. Yeah. So the legal part of what we do is crowdfunding,
Okay.
regulation CF.
Okay.
And we're able to raise up to $5 million annually for investors.
Okay.
Yeah.
Before to get another question.
Oh, yes.
Yeah, just like before I was in the session on like a compliance session.
Yeah,
It feels like wow, heavy, right?
it is.
Now for this one, so new platform or through equity share is, can I say or just believe in that it's just when taken care of, or do I have to go through again like lawyers or somebody else's another compliance burden on me? Because it's kind of like there was a lot.
That's a great point. We always, 100% of the time recommend that you have your own attorney because you have to cover yourself, right? Our tools provide you the ability to reduce the time that you spend with your attorney and the money that you give him. Now, it's funny, I was speaking at Hampton's Tech Week last summer, and I ruffled some feathers when I said on stage that lawyers were the ones who were going to get hit most by the AI boom. And a lawyer got really upset in the audience, and he said, "No, AI can't do what we do. They can't do it." And it was how upset somebody gets is how you know
How real it
how
is.
you know that they're going to get disrupted, right? So